Another nasty day in the markets. Let's look at let's start with the Dow. And we can see that it is continuing to go down. In this down channel, gave you a little bit of flag, and it's continuing to the downside. I think we actually were looking more on a 5-minute where I had this upward wedge and it broke down. I explained this about, I guess it was yesterday or the day before. You can look at the video I have, and I said, might be a rising wedge, which, it's this pinch as it breaks down, and it broke and it broke down. It's continuing to break down. I'm not, excuse me, not really going to go into the why, but now we are approaching. We have the 1050 cross, and we are approaching the 200 day. Now, I just want to let you know that I am not a person that views the 200 day as a net or, as basically something that has to bounce off of because it's the 200 day. Because if you didn't have this 200 day in here, what would your thoughts be? It's consolidating sideways. If you look at the weekly, you can see that it's continued from the shooting star a month ago. And at previous highs, it has continued to the downside 1, 2, 3 weeks. Right now, again, this is a sloppy trading, trading wedge to trade. I wouldn't want to. I want to trade trending markets, either up or down. And that's it. When it's going sideways, like this, it's something that can be a little detrimental to your account because I find that I make my most money when I trade the trend. Now that we see that the tide is shifted, and that means that some of you say I don't want to not trade. Well, that's true, but at least rein in your account size to say, or your position size to say, I don't want to trade as much, or I do want to trade, but I'm a little bit cautious. That's fine. If you want to put a little skin in the game, maybe use your half of what you typically put in, or a quarter, and then don't get mad if you're right, and then you're like, oh, I missed a quarter, because if you went all the way in and you feel uncertain and you lost, then guess what? You've lost too much during the time where you just knew you felt a little bit conservative. So that's kind of the way that you got to look at this. So let's look at the composite, because we did have a lot of names that broke down on that as well. You see that we had this pendant, we had a shooting star yesterday, and it rolled over, and it rolled over in a big way. So it's right at the 50. If you look at the weekly, you can see it's right at the 10 days. So we have to see what's going on regarding that. And if you feel like you need to take it easy. I mean, on the monthly, you still look good, but I mean, hey, on the weekly, it's at a point that you're saying, okay, if this is a retracement, we have a 3% retracement on the weekly, but if you're starting to talk about, I mean, it should pretty much be the same thing. Yeah, so 3.2. So, I mean, right now, you see that it's breaking this previous level, or it's getting up to this previous level. If you put it down, you could say it's right there. I know that might not be perfectly straight, but it's something to say, listen, if it flags up, if we get a lower high, you jump in. You jump in. And that means you jump in and you get to the bear side. You just see, okay, if it's, and this thing happened already, and I want to kind of show it on the SPY. We had something similar at this area where it retraced, and this retracement was a 5%, and it ripped to the upside. I mean, and it ripped, and it squeezed the bejesus out of everybody. And it was at the fifth retracement point of 38%. And right now, I think this is now, yes, it's at 30. This is still the 38%. So we kind of have to see where it goes from there. And I'm still drawing this from there. So if I took this up a little bit, yeah, 38% is still right there. So, but you can see it's still in a down channel. So do not fight the tape, and I'll probably do another video regarding that. Do not fight the trend. If it's in a down channel, don't start buying up. Don't start buying down. The Russell. Same thing, broke down. Look at the weekly. You can see that it's now, rolling in under the 10. You have a bearish MACD crossover. So you just have to be very aware. Still on the monthly, you're fine, but this is something that if you're swing trading, if you're long-term trading, you have your stop set in, stuff like that, that's fine. But if you're swing trading or even day trading, you still need to look at this stuff. I'm very it's kind of baffling to me that day traders don't look at the daily. Like, I'm like, even if you're scalping, who cares? You just want to make sure that the overall trend is in your direction. It doesn't make any sense to me, but who am I? At the end of the day. So let's go into some names. We had Apple breaking down, giving you a nice engulfing pattern right now. On an indecision shooting star at the top of these lower highs. Look, this was at one point all green, but now it isn't. Testing the upper resistance line and going back down. So could it roll over? Absolutely. We have price line. It went down, bailed hard. I mean, it's a 4% rip in one day. You had a bearish engulfing pattern yesterday, and it really tanked to the downside today. And these are a lot of the strong names. Amazon, same thing. Gave you a bearish engulfing pattern here, gave you up, and then gave it up, and then tested this lower line that I put down, I think it was yesterday or the day before, and it crashed below it. So right now you're just looking for, don't chase, but you're just looking for flags right now. If it flags and gives you weakness on the volume, this is where I like using the volume. If the bounces are on a specific weakness and it doesn't give you a higher low, and instead gives you a lower high, you know what's going on. You have Google. Google is continuing to break down from this engulfing pattern. So you have an engulfing pattern here, and 1, 2, 3 days down. I would be peeling profits into your in. Okay, it's just, you have another one I was looking at, New Skin. I was looking at for the long side. Glad I never got in. Why? Because it's down almost 5% from where I was looking to get in, and that's a part of trading. So look at some of the biotech names. Come on. Creamed, getting creamed. Give you a little short, give you a little bear flag going 2 days. Little bear flag right here. And got creamed with this little shooting star. Got creamed today, almost 5% down. You got Pandora. Pandora was looking great a couple weeks ago, but and you should still just make sure you look at these higher time frames, the weekly and daily. But like I said, it could come back and test this gap very, very quickly. You got Tesla now flagging to the downside. So this might be a good opportunity to actually get to the short side, because you have weaker volume, which you see the volume got weaker to the upside, tested a 10, and if it breaks down more, it could continue to the downside. It's already a 5% rip to the downside. So be careful regarding that. Solar City actually was looking really strong today, and regarding relative strength, it actually showed a lot of strength. So you kind of got to be aware of that one as well. You got Facebook. Again, everything was all good just a week ago, but at the end of the day, we know that we have this huge point to me to test. So this is IPO high that I drew in, and you can see that it's getting up to that point. So if it retraces and breaks below that, so I mean, and you could play this by ear. I don't know if this is exhaustion or not. You don't know if it's exhaustion, because you had this and you could have said this was exhaustion, and it still drifted up on your behind. What after quote the exhaustion, it still gave you 5.76% from an exhaustion. Some would view as exhaustion from exhaustion volume. So this might not be exhaustion volume. So see what the price tells you at the end of the day. Let's look at LinkedIn. LinkedIn had this pennant, and it broke down, and it continued to break down. Now it is almost filled this gap, the entire gap. So really have to look at that. I am over my time, but I'm going to do another video because I had some other questions that came up, and I like to answer them as soon as possible. So again, if you like what you see, subscribe. You can also follow me on Twitter at MaximusAnalysis, and I'm on Stocktwits as well. So take care.